All right, so let's talk about trading and investing. There's a lot of different things to take in here. So there's a big difference between investing and trading. Investing is when you put your money in and you're gonna let it sit. You're like playing the long game. That's what you're doing. That's like what Warren Buffett does. Puts money in, he's looking at like next year, 2 years, 5 years, 10 years. He's looking at the long game. Now, I started investing several years ago. Investing is something I think is so important and so awesome. It's such an incredible thing. I love the stock market. I love how it works. I love watching it change and fluctuate. I love seeing the things that are going on in the world that ultimately affect the stock market, because the stock market, as you've seen in my previous videos, the stock market isn't weighted based on what the company is supposedly doing, but how the company is going to be perceived by the masses. Now, that's a weird thing to wrap your head around, but when it comes down to it, it's not, is this company this valuable, but do people see value in the company? Okay. Trading is when you can do lots of different kinds of trading too, but you could do trading in the stock market, and what you're doing is you're buying in for a moment because you're waiting for a switch, you're waiting for a pivot, you're waiting for something to cash out. You see it moving, you buy in, then you make some money, and then you're out. Okay, you're trading, you're jumping in and out, okay. I've known some people who did lots of crypto. And what they would do is they would never hold it. Crypto was, especially within the last 6 years or so, it's been extremely volatile. 2018, it was something that was just like, it was off here and people were trying to get their head around it, but there was a lot of, like, any serious investor was just, it was laughable. It's like, this isn't real, it's not tangible, let's not get in on this, right? But the thing is there's people, we call them, serious traders call them scalpers. Because that's what they do. They scalp. They jump in on a crypto. They don't hold it for more than moments, just like minutes. I'm talking about, you won't hold a trade for more than 2 to 10 minutes. I mean, you hold it 10 minutes, that's a long time. But it's like they're playing with extremely volatile crypto, so we call that scalping, right? They're just jumping in, making some quick cash, and getting out of Dodge as quick as possible. Now, a swing trader, you can hold that up to a day, maybe 2 days. Never more than that, and never, ever, ever over the weekend. Excuse me, thought I was gonna sneeze. So a swing trader, you're handling your trades much different. What you're doing is you're watching patterns and trends. It's really mathematical. There's no psychology involved. There's not this aspect of what's going on in the world. What's happening in the world isn't important. You're mathematically calculating patterns and trends in a chart. So you're watching a trend, you're watching candlesticks, you're watching ups and downs, dips and waves. You're watching what's happening and you're predicting trends based on mathematical algorithms. This is swing trading. Okay, now there's day trading. People will go into the stock market, things like that. Some people even do like Forex and stuff, but mostly they're just picking things for a matter of hours, a matter of a day. They don't hold it for long. Okay, there's a big difference in these different kinds of trading. And now you can do more than one, but you have to go in with the right mentality. That's what it all comes back to, is are you approaching the stock market and are you looking at what's going on in the world that's gonna affect how that company is perceived? Because that's what it comes down to. It's how the company itself is going to be perceived by the masses. Because if the company is perceived as well, people are going to buy in. And as they buy in, that value goes up. As they cash out, as they see less value when they cash out, then ultimately the value goes down. So the company isn't really going up or down. It's really just people's perceived interest of said company. Again, when you're looking at swing trading, you're watching pivots. You're watching mathematical patterns. So you're studying these charts. Again, like I said, you can do both of these. You can do the different types of trading. You can even do scalping if that's really what you want to get into. I've known some people really, really, really good at it. I don't like scalping. You can lose your shirt, man, so fast. Like you could be done. So you just gotta know what you're getting into, and you gotta be careful and be mindful. You're not gambling. It's never a gamble. That's the thing. And scalping is one of those things that can definitely be a gamble from time to time if you're not extremely good at it. It's not, you're not playing poker, you're not gambling, you're not betting on a roulette table. You are literally calculating odds. Calculating odds. The greatest are always in the black. They never lose. And the reason is because they're watching these patterns carefully. Either they're watching the stock market and they're carefully predicting what other people are going to perceive these companies to do based on so many different things. And it can be the most ridiculous, abstract things possible. But see, that's what always piqued my interest. It seemed so exciting and so cool to me. I just couldn't wait to dive right into that. With swing trading, with Forex, with currency, what you're doing is you're not predicting people's perceived value. You're predicting patterns of change based on what's happening. And you're just watching the mathematical changes because these things are always going to go up. They're always going to go down. They're always going to go back up. You're looking at the Aussie, the Euro, the Yen, pounds. Like you're looking at all these different things and all of these versus the American dollar, Canadian. Like you can do it so many different ways. You can even get into precious metals like gold or silver. Those are a bit more volatile, and you can get even into crypto. But the thing is like I said, these things are going to fluctuate because things are happening in the world. There's always money be exchanging hands. There's always money exchanging from country to country. There's always these things happening. And because there's always things happening, what you're literally just predicting is just the mathematical patterns. There's lots of ways you can do that, and there's lots of different things to take in, but there is just a huge difference between the stock market and Forex. And definitely a huge difference between either of those and crypto. There is. Now, people think they can just watch a YouTube video, some of them shorter than mine, some of them more eloquent than mine, some of them more Forrest Gump, just goofy than mine. But they think they can just watch a video or read a Reddit article or see an Instagram reel or something on Facebook, and they're like, you know what? I'm going to jump in and I'm going to do that. I'm going to make some money on Bitcoin. I'm going to make some money on this company right here, that company right here. So-and-so told me to buy in, so I'm just going to buy in. Hey, man, if you know somebody who knows something, good for you. Be careful. There's a reason that people will go to firms and pay firms to invest on their behalf. You worked hard for your money. Don't gamble it. Learn, take the time to learn and get educated before you dive in. That's my 2 cents. That's right there.